Well, welcome to our 2016 tax time preparation tips for property investors. And for those that don't know me, I am David Shaw, the CEO and founder of WSC Group. If you're listening to this webinar, thanks very much for attending. It's always fantastic when people actually make an investment in their knowledge. And today we're particularly focusing on tips as we're coming up to the year end and coming up to our tax season. We're particularly focusing on tips today for property investors. Just to let you know a little bit about who WSC Group are, and you can see there we consider ourselves as trusted advisors with a special focus in investment property, business advice as well. We have many business clients, small, medium-sized businesses, and about 400 self-managed funds as well. So we provide taxation, accounting and financial services as well, and advice to clients throughout Australia, including over 3,000 property investors. Now, WSC Group are able to carry out property investing modelling as well to show before and after tax costs of properties, cash flowing results of property investments over many years in some cases, as well as selecting the most appropriate structure to use when you're purchasing a property. We have clients ranging from those who are building a property portfolio through to using unit trust, to those clients undertaking large-scale property developments as well, through to the use of partnerships, joint ventures and companies. It's a very big space, the property space, so you need to have an accountant who's very, very experienced in many areas, because there is a lot of issues in terms of taxation and property. Just a couple of things as well. This is a general advice. So the advice contained in this document is of a general nature and does not constitute specific financial advice. For a detailed financial strategy, you consult with a qualified financial advisor, and we can certainly help you with that in the WSC Group before making any investment decisions. So without any further ado, let's have a look at what you can actually claim. And basically the simplest way of maximising your tax refund is making sure that you have an understanding of what's deductible, and more importantly ensuring that you keeping a clear and concise record of these expenses. Remembering there are many cases, and some of those cases involve record keeping, where the ATO has actually been successful against the taxpayer, and particularly where there were areas where there were poor record keeping. So we always advise our clients certainly at any time to start keeping clear and concise records, because that certainly assists you with your claiming of deductions. Certainly be certain that you've considered the following as well when we're talking about specific deductions in relation to your investment properties. Now you can see there the summary items that I've actually listed. Council and water rates, of course those costs are deductible. Strata levies, just make one comment that there might be some circumstances where some special fees are of a capital nature, but normal strata levies in the great case, in many cases, are deductible. Insurances are certainly deductible: building insurance, landlord's insurance, etc., rental protection insurance. Agent statement costs and agents management fees are certainly deductible. You can see there are a couple of other costs too: bank fees, and there's a straight bank charges, monthly costs you might have that are deductible. Now I'm also focusing, as we go across the page, to borrowing costs. A lot of clients, when they first come on board, actually miss the claiming of these costs, and you can see with mortgage, with borrowing costs, you can see mortgage insurance application fees. Any of these costs that the bank charges can generally be written off over 5 years. Individual borrowing costs of under $100 per item can be written off actually at 100%. You can see there as well additional costs such as repairs and maintenance deductible, interest on loans, travel expenses particularly deductible, but you've got to make sure generally this is after that you've started producing rental income on the property, and pre-purchase travel expenses are not deductible. Also depreciation, you can see there your depreciation and special building write-off, And some of these items, of course, aren't eligible for an outright deduction, but can be depreciated over time. Of course, also there's some other deductible costs, the dreaded land tax that state governments impose, and that's a whole probably other topic in itself. But if you pay land tax, you would certainly get a deduction for it. Also, renovations or improvements that you've made to the property. In some cases, you're going to certainly have to depreciate these items. The tax office has taken a different view over the years with renovations and improvements, generally requesting and expecting that most of these improvements will be capitalised over a period of time. All right, a couple of other points in terms of getting the claims on your new investment property right for the first time. And if you purchased a new investment property, you'll save yourself certainly money by ensuring that you get your deductions right the first time. And in order to do this, when you first purchase a property, you should always supply people like ourselves with a purchase settlement, because this is a record of what actually occurred when the property was settled, and often they'll have an adjustment for council rates and water rates, etc. Also, the loan offer documents or disbursement documents, again, we talked about borrowing costs being deductible, so that's very important in terms of your costs and your claiming of costs over those initial years. We've also set a copy of depreciation schedule, and remember the cost of preparing the depreciation schedule is also deductible. And if you don't have a depreciation schedule, even on an old property, an older or old property, it's in most cases advantageous to get a depreciation schedule, because the benefits you'll get will far outweigh the cost of the actual depreciation schedule. So many of our clients, many of our clients with depreciation schedules certainly prepare these well after the fact, and they've actually missed out on deductions for earlier years, and we can't actually go back and amend those returns because we can only go back now and amend returns for 2 years. So if you've got a property, for goodness sake, make sure you have a depreciation schedule prepared by a authorised quantity surveyor. All right, so a little bit on work-related deductions as well, because a lot of our a lot of our work-related deductions can also be claimed, as well as property investment deductions. So many of our first-year clients are surprised at how much time WSC spend through questions about their occupation and potential deductions. Certain occupations allow, the tax office allows additional deductions, and certainly if you work at home, there can be claims made for home office usage, computer depreciation, or the internet. So don't forget to keep receipts, of course, and talk to us about those work-related deductions. It's really, really important. There's been cases where clients have been missing out on many thousands of dollars worth of deductions in relation to home office. So certainly a reason for talking with one of our staff to make sure that you are getting the appropriate deductions. Look, a couple of things in finishing up is ask questions. Don't be afraid to ask your account manager what they're doing and why. Your account manager not only prepares your tax return, but can also assist you in the tax implications of your investment. If you understand why your account manager needs certain documentation, it saves you a lot of time. And we're always talking to our clients about preparing a system in terms of getting their documentation for the tax returns to be prepared in that year. So it's really important that you actually establish a relationship with an accounting firm such as WSC Group, who have that broad range of experience in preparing many different types of returns. So really important to ask questions. Sometimes we have clients mention things to us that hadn't been mentioned previously. We're always interested in our clients mention everything to us, and then we can actually work out if you can claim a legitimate deduction. It doesn't hurt to ask, and at least us saying, well, we can't claim a deduction for that, the question doesn't hurt. So look, I hope that that's been just some tips. Now make sure that you also subscribe to our YouTube channel. We've got lots of property webinars coming up. And WSC Group, as I said, are an expert in the property, small business and self-managed super fund area, and we also have financial services which we can offer. So we see ourselves as a trusted advisor. Please contact us from our website. We've also got a toll-free number that you can actually chat to us. Look, thanks for your time, and we're looking forward to seeing you at tax season. Thanks a lot.